Hello everyone, welcome back, Patrick here. In this video, we are going to have a serious discussion about GIK Lightning eMotors. Let's be totally honest, what the heck is going on with this stock? It has been underperforming, even though it's an electric vehicle company. Right now, the stock is going down almost every day, and it is hurting my portfolio, and probably yours too if you have it. So in this video, we are going to look and see, is there any updates since the merger was announced, and what kind of price target can we expect to see by the merger? I'm using GIK as a very important test. If it has a nice ramp up to the merger, like the price goes up, it's going to be a very good indication that we can assume that NGA, ACTC, and Arrival are also going to go up. But if GIK doesn't get any momentum whatsoever, I'm going to be a little bit more cautious about the other ones. So let's get started. Let's analyze this. Please like and subscribe. You guys know it really helps. Alright guys, quick disclaimer before we get started. I do have warrants in this company. It is one of my core positions right now. I do think the company is like really well positioned, but with that said, I'm not going to try to convince you. Either you're in or you're out. This video is all about finding a reasonable, rational price target. But first, before we do that, we need to look and see like what are some of the catalysts and what have we learned over the past month or two about the company. Like, are there any news that could affect the share price? One of the important things is going to be when they announce a shareholder meeting. Usually this kind of kicks off the excitement around the company. People want to buy in, hoping that the share price goes up at the merger. So that's what I call the ramp up towards the merger. Usually when they announce a shareholder meeting is when this starts. Well, on February 4th, the Tim Reeser, which is the CEO, announced that the SEC asked more questions and they had 2 weeks to reply. So they did, right? They sent their answers. The SEC sadly took the full 2 weeks to submit their next questions. And because of that, even though people had the anticipation that on February 18th they were going to announce the shareholder meeting, sadly it did not happen. These answers from the SEC, these additional questions, came after February 16th, which is when the third quarter financials kind of what he calls went stale. So now they have to submit more information to the SEC. The SEC is backed up because of all the SPACs and all the filings. And because of that, we can expect it's going to take another full 2 weeks, which would bring us to early March. So this is potentially the catalyst when we're going to learn about the shareholder vote, right? And this is going to be a very important catalyst. Hopefully that's when it's going to give a little spark to the share price, as I'm going to show you in the chart later. Something that's not really news, but very interesting is Inside EV, the channel on YouTube. So Inside EV's US published a factory tour of the company. If you're invested in this company, I strongly encourage you to go watch it. You are going to learn so much about the process. So the wiring, the assembly, the battery packs, everything. It's an hour-long video. They really go through everything. So if you're invested in the company, you'll probably really enjoy it. Now, very small news in December. They announced Class 3 van, so added to their lineup. The company over time is going to add more and more models based on their customer demands, and it's good that they're going to be able to adapt. The only downside is that they really depend on the Ford chassis, if you guys know a little bit about the company. Oh yeah, speaking of that, they did mention in one of the interviews that once they reach about 1,000 orders from Ford, they're going to be able to get what's called a glider, which is not going to have the motor inside. So hopefully they'll be able to lower the cost, because instead of buying the full vehicle, they're only going to buy like the carcass of the vehicle, but then they'll be able to slide in their electric vehicle motor. All right, so next news is this ABC coach company that ordered 200 from GIK Lightning eMotors. So that is very good. This is a repeat customer. So these are buses that are fairly expensive. So the company over time is going to get more and more customers. The customer seems to be happy. So that was great news, I thought. This is one of their main partners right now. If we look at the chart, at the moment, the share price closed at 11,679 and after hours 1191. So the share price has been crashing. I feel like this is almost a capitulation of the investors for this company. It's been downtrending for quite a while. As you guys can see from the middle of January, right, it's been on a down slope. pretty severe, right? Sometimes it goes up a little bit, but over time, as you guys can see, it is a pretty clear downward channel. So here is what's very interesting is when they announced, or rather when people expected that on February 18th, the shareholder meeting could potentially be announced. Look at how we had this nice spike here, right, outside of the channel. So this is very, very positive for the future. We do need to keep that in mind. If next week they announce the shareholder meeting, we can hope that potentially we might get a little spike in price, and hopefully instead of going straight down afterward, because it was denied that the shareholder meeting was going to happen, they had a delay. Well, instead of going like down right after, hopefully it gets a little spike and then it starts to trend up, right? It's going to break this downtrend. So this is what we know so far, right? 1191, the share price has been very, very depressed since the peak of 1736. So I'm not sure how long you guys have been holding, but it has been pretty depressing. The warrants right now, after hours 312, the peak was around 465. And it hit that twice, here and here, but was never really able to establish like a breakthrough resistance and stay there. On the downside, right, it hit about 335 twice, here, well, kind of here, and now, which is very bad time for the stock market, as you guys know, it went straight through it, and now we're under that 335 that had been hit almost 3 times. So this is very, very bearish. Hopefully it can consolidate here, right? This morning was very, very bad. It went below $3, but since then, as you guys can see, it rebounded a little bit. Let's see if we can actually zoom into the chart. As you guys can see, like during the day, it really, really dropped. And then hopefully we'll have to see next week if it can start to stabilize, establish a support, and then rebound once they announce the merger. The only saving grace about the share price falling for Lightning eMotors is that it is following the market. The entire market has been getting crushed by this rate hike scare, right? So everything is falling. The S&P 500, which is the ETF SPY, has gone from 392.93 to 380.36 this week. So everything is going to fall while people are worried that with the economy improving, the 10-year note is going up, the Fed might increase the rates. So it's not going to happen, in my opinion, but that's what's creating so much panic in the market right now. If we look at NGA, you guys can see the exact same thing. They are all going down lately. So NGA since the 18th, which was when we learned about the delay in the shareholder meeting for GIK, went from 24 to 20, right? It was kind of stable for a while, but then when this entire scare in the market happened, look, it fell. And then we can see the exact same thing with ACTC Proterra. Right, so this one went from 24.5 to 21 in that same period. Now, if we look at some of the companies that have actually merged, you're going to find the exact same thing. So this is XL Fleet, the company which, in my opinion, has the closest business model to GIK. You guys can see, I mean, this one went down also this week. So right now it's at 14.17, and at its peak, after the merger, it had crossed $35. So that is a massive drop for this company. GoEV, Canoe, same thing. This company is not the same business model, but the reason why I want us to follow it is that, in my opinion, it's following kind of the same phenomenon of trying to do marketing. Like GoEV, if you guys remember, Canoe had a lot of videos, were trying to hype the company, but nothing was working for a very long time. It got stuck at $10, and really, like, no one was really interested in the stock. And that's why I feel like a lot of it's similar to GIK. The CEO is very active. He's trying to promote the company. They have that, as I was showing you guys, like the Inside EV Factory tour. They're trying to promote the company, but so far, nothing is really working. So that's why I want us to do kind of a comparison with Canoe, because both companies didn't have any traction when they were actual SPACs. Now, Canoe, after the merger, right, did go up to $24.90. Let's see, $24.90. But over the past couple of days, it has kept dropping and dropping and dropping also, now at $12.86. So I updated my spreadsheet with all the information for all the EV SPACs, and I added Canoe and also XL Fleet. So I hope you guys like numbers. You're going to see several of them. We'll go over fairly quickly though. So I do notice that even though the share price is not really important, we all know that, it's all about the valuation, I feel like it's kind of divided into two different groups. You have Lightning eMotors, Canoe, and XL Fleet that are in one group. The share price is between $11.79 and $14.17. And then you have another group that is the other, like, more well-known, more hyped up companies of Proterra, Lion Electric, and Arrival. Those are around $20, right? So even though it's all about the valuation, it feels like the share price, maybe because of price memory, I'm not quite sure what affects this, but it feels like the prices congregate in these different groups. It's even the case with the warrants. As you guys can see here, the warrants for the first group are between 247 and 414. You can see it on the graph. And then you have the other more hyped up group that are between 697 and 894, right? So whether we like it or not, the market is bringing Lightning eMotors more in line with Canoe and XL Fleet than with the other companies, which kind of makes sense, right? We all think of it more of a, even though they don't want to be called a retrofitter, they're not really the same type of company as this other group. So when we look at the revenues is when we're going to learn so much more. I hope you guys are excited about this. So 2021 revenues is what we can expect is going to be the more realistic ones, right? I didn't even want to include the 2025 numbers because it's too far out. Like, it's just projections. But 2021 should be fairly accurate. I mean, the companies know what they have in the pipeline for this year. So we have Lightning eMotors at 63. Then we have Canoe at 120, XL Fleet at 75. So that's the first group. Then we have Lion Electric at 204, Proterra 246, and Arrival has no revenues for this year. So again, you can kind of see that they're in two different groups. 2023 revenues, though, kind of changes. You have Arrival, which is with its crazy projections for the revenues. You guys already know about this. But then the other ones kind of all seem to congregate, right? So you have NGA that still has fairly high projections at 1.6 billion, but all of the other ones are between 640 million, 647 for XL Fleet. So those two companies are supposed to be almost neck and neck. You have Canoe at 840 and you have Proterra at 838. So those projections for those four companies are fairly similar, within 200 million of each other, right? So now how does that translate into valuations and also like price multipliers? By looking at the valuations, you're going to see just how undervalued GIK Lightning eMotors is right now. It is almost ridiculous and laughable how undervalued it is compared to the other ones. So that's why I added more warrants this week. Of course, I'm not happy about the share price dropping and the warrants too. It's hurting my portfolio right now. But when you compare it with the other companies, it's pretty obvious that at some point they have to correct. Like, either the other companies need to come down a lot or Lightning eMotors has to come up to match it a little bit. So we have Lightning eMotors currently at about 807 million. Then the closest competitor is XL Fleet at 1.86 billion. And we know that those two companies are almost neck and neck in every aspect of the company. In fact, I like Lightning eMotors better, right? So their projections are fairly similar for 2021 and 2023, and yet XL Fleet is double their value. So either XL Fleet needs to drop a lot or GIK needs to go up for them to become more in line with each other. It's probably going to be a combination of both. We know that XL Fleet has been dropping. Then the closest after that is Canoe at 3 billion. We have Lion Electric, which lost a lot of value at 3.4, Proterra at 4.19, and then we have Arrival in a class of its own at 1357. So we can see that the valuation here, GIK is very cheap compared to the other ones, but what matters a little bit more is when we compare it with the revenue expectations for 2021 and 2023. So here we see that, like, the post-merger companies are actually much more expensive compared to the pre-merger SPACs. I mean, often we talk about the SPACs being very expensive, but if you compare it with Canoe and XL Fleet, look at the revenue multipliers for 2021 at 25 and 24, compared to Lightning eMotors at 1281, Lion Electric at 1685, and then Proterra at 1703. Isn't that interesting, right? So the pre-merger SPACs are actually very cheap right now compared to the post-merger electric vehicle SPACs. I'll have to keep that in mind. Then for 2023, we have pretty much the same thing. We have Lightning eMotors at 126. Then we have XL Fleet at 288, so even more than double the valuation than GIK for the 2023 revenues. Then after that, we have Lion Electric, because we all know that their projections are fairly high compared to the other companies. We don't know if they'll be able to match it or not. Then after that, we have Arrival, Canoe, and then we have Proterra, which is the most expensive one right now, based on their 2023 projections. All right, friends, in the wrap up, we have to come up with a price target. This is going to be very subjective and depend on your interpretation, but after collecting all of this data, comparing with the other electric vehicle companies pre-merger and post-merger, if I pull out my crystal ball, I'm going to say that this company is probably about 50% undervalued compared to the rest of the market. So in my opinion, right, considering the peak at 1732, and then that little spike that we saw, that little spark when people expected that the shareholder meeting was going to be announced, which brought it to 1576, right? We know that people are willing to pay above $15 for this company. Now, if we add about 50% to the share price, I feel pretty confident that we can reach about $18. Now, is it going to happen before the merger, right after the merger? I really can't say. I mean, you guys know that every company is different. They have a different level of hype to them. This company has none. They have little different circumstances. Right now, we are in a correction. But we do know that the other companies that we looked into are also in a correction. But it feels like GIK has been way oversold compared to the other electric vehicle companies right now. So that's why I do feel like it is very reasonable to expect that once they announce the shareholder meeting, we will see a reversal and we can get to about $18. If we're very lucky, we can get kind of a Canoe scenario, right, where people for some reason bid it up, and we could get to 20, maybe 22. I don't think we're going to get to 24.90 with Lightning eMotors, but $20 is possible. But if we do reach those levels, I wouldn't buy it at that point, right? I would expect it to do exactly the same thing as Canoe and XL Fleet, and then crash after the merger back down to a more realistic price, like $15 or something like that, which we've seen. Like, it kind of stalled here around 15. This 15 was the support and the resistance many times, right? So that's kind of what I expect is going to happen. But before the merger or at the merger, I can see it getting to $18, and that would bring the warrants intrinsic value to about $6.50, which would be great because my averaged about $3.60. So that would be at least 100% profits. So guys, let me know in the comments what you think. Do you think I'm accurate? Do you think I'm totally off and it's going to be higher than that or lower than that? Remember, my price target is $18 for this company.